Good morning, ladies and gentlemen. This is Greg Michalowski from FXDD, and this is the Friday, April 2nd, 2010 New York Opening Forex Report for FX Street. Of course, today is Good Friday. Today is also the day that the BLS is going to be releasing the U.S. non-farm payrolls. The expectations are right now for a gain of 184,000. This is versus minus 36,000 last month. The change in manufacturing is supposed to show a gain of 15,000, and the unemployment rate is supposed to remain unchanged at 9.7 versus unchanged, 9.7. What I like to do is take a look at the market from a risk standpoint, take a look at the where the market may go. It's traditionally over the last 5 or 6 months, the market range off the first 5 minutes has been about 50 to 70 pips, high to low range. That means that the market either go down and then go up, or go up 50 or 70 pips, or go down 50 or 70 pips. One or the other. The market has to decide which way it wants to go and see the action of it. I would expect yesterday, especially when we saw the Goldman come out yesterday and lower their estimates from 275 to 200. We saw the euro rally, we saw the sterling rally, we saw the dollar Swiss sell off, we saw the dollar yen kind of stay the same, which is kind of weird, but it does seem like the dollar yen seems to be supported for other reasons at the moment as people take off their hedges. But let's take a look at the euro and take a look at the key levels. What I'm going to point out here is this trend line comes in around the 136.18 level. This is connecting the highs from 2010. Again, 136.18 on the top side of the key level is 135.35. You can see the number of lows that we had in at that level: low, low, and 134.37. That was low from March 2nd. So those are the three key levels off the daily chart that I'm going to be looking at. If the market should break this level, we could see the euro long term head up toward this 137.68. Let's go to the hourly chart, and I put in a channel here, a channel of the most recent. It's kind of wide, but we do. You get an idea of where we may or may not go. Well, the current market trading at 135.52 in the normal range after the first 5 minutes. We could see the market head up toward this 136.07 level. That's about 55 pips from the current level, and that would be a nice target on the upside to go and test. That's a 61.8%, 136.07 of the move down from the March 17th high to the March 25th, I think, low, and so that would be our first target level on the top side for the euro versus U.S. dollar. If we continue up and we get through that level, then we could also see some resistance at that 136.18 level. Again, that's off the daily chart. That's this point right here on the trend line here. So really, coming into the number, we have resistance at 07 to 18 level on the top side. On the downside, if you take 50 basis points off of this level, it comes in around somewhere around the even level. Down right below that level is a 100-hour moving average. That 100-hour moving average comes in at 134.92. So just like we have about a 10 pip range on the top side that we'd be targeting on the top side. On the top side, we can have a range on the downside which come in around the 134.90 to 135.02-ish type area, maybe 134.93. Yesterday we came down, tested the 100-bar moving average. This is going to be another key level. Once you see that happen, the market realizes that and it starts to come down. So that would be the target level on the downside for the euro versus U.S. dollar. We'll be watching those levels closely and see which way the market has to go. Currently, the market is trading right around the 50% retracement of the March move. This is March high, this is March low. The midpoint is 135.42. That's where the market is pretty much centered around, with the market trading at 135.49 as we head into the number. Sterling versus U.S. dollar. Let me fix this baby. This is also in a channel that's been going on for really the last 6 days. 1, 2, 3, 4, 5, 6. On the downside, we've held the bottom a number of different times, and on the top side now we've had a lot of different times at the top side where we held the bottom. So with the market coming in here today at 8:30, the trend line is going to be at 152.25. The current price is trading at 152.50. So in theory, we should see the market move through the 25 level on a bearish number straight through that level, coming down, and what we'll be looking for is a retracement back higher with the price coming back up to test the 152.25 area. So what you look for is a break and then a retracement. If that level holds the bottom side of the trend line, then we should see further pressure to the downside. Now we have 151.81 is a low from yesterday, so we saw a nice floor at that level. We saw a nice high here, so that's going to be a key level on the downside, as well as is a 100-hour moving average below. That 100-hour moving average currently comes in at 151.32. On the top side, I'm going to zoom in here a little bit. On the top side, On the top side, what we have here is 153.16 level. If you go back in time, take a look at this period right here, you can see that there's a number of highs off this hourly chart. Ceiling, ceiling, ceiling. Had one little break, fail, ceiling, ceiling, ceiling. Boom, market starts to move down. 153.16 is going to be a key level for me on the top side. That's going to be remember price that the market's going to have to get through. That may find some congestion up there at the 153.16 on a bullish number. Above that is a 153.65. That's this top trend line right there. Wouldn't put it past the market. So you can see what we're kind of in between, equidistance between the 100 and this top channel line. Watch this level right here. Watch this level right here, and we'll see how the market reacts off of that. Let's take a look at the dollar yen before we close for today, and here we have a nice trend line. Here we came down, tested the trend line, so now we have 1, 2, 3 different points along that trend line. That trend line is going to come in at around the 93.85. We only market's trading around 93.96, so we're going to go through that level. Other key levels on the downside is 93.65 for this currency pair. The longer term key level is 93.12. What's 93.12? If you go to the daily chart and you do the Fibonacci from the high of 2009 to the low of 2009, the 50% retracement comes in at 93.12, and we bumped against it and got through that level the other day. That was a key level for the dollar versus yen. We actually went below that 93.12 over here on Wednesday. The market came down and bounced off of that, and then took off from that level, and since that time the market has been up. So 93.12 is going to be a key level on the downside for the dollar yen. It also corresponds with the 100-hour moving average, is currently at 93.16. So on the downside, that's we're going to be looking for key support down at that level. Could also see support at the 93.30. That's a 38.2% retracement of this last move to the upside. On the top side, watch 94.34, and if you go back in time, 94.34, actually have to go to the daily chart. Go back to 94.34. You can see that there's a number of different lows and highs near that area. It's plus or minus 10 pips over there, but it's a nice intermediate level that I thought that we can look at as a resistance level on the top side, 94.34, and then look for the top side trend line at 94.81 to contain the upside. So that's my morning report for the unemployment numbers. Generally, there's a lot more risk during this. Today is going to be no exception, but all the markets out with the Europe's all closed for the day. Stock market not open. So look for kind of a contained range, and then we'll see what happens later on. But it could be more volatile than usual. Be aware, be prepared. Thanks a lot to Greg Michalowski for FX Street and FXDD. Bye-bye now.